Hey everyone, Dan Geltrude here. Welcome back to Token Money Magnet, the only show where you don't just watch, you become part of the experience. All right, today's a big one. We're talking about digital wallet ownership. If you're stepping into the world of tokenization, you need a wallet. Think of it as your digital vault for buying, selling, and trading real-world asset tokens. But here's the key. Ownership matters. Ever heard the phrase, not your keys, not your crypto? We're going to break that down so it makes sense. Plus, we'll take a look at Calp Wallet, which is making Web3 safer, smarter, and easier for everyone. Today's topic is essential for anyone stepping into Web3. Think about it. To do anything in Web3, you need a wallet. Now here's something that'll blow your mind. Right now, 653 million people are using Web3 wallets worldwide. And guess what? In 2025, we're looking at 900 million users. That's not just numbers, that's a complete transformation of how we interact with digital assets.
Ever heard of Web3 wallets but not sure what they are? This video will help you understand. Imagine a wallet that's more than storage, giving you total control. Meet dApps, aka Web3 wallets. Web3 wallets come in two types: hot wallets, browser, mobile, desktop. Cold wallets. Web3 wallet adoption is growing rapidly, driven by global crypto user growth projected to reach 900 million by 2025. Web3 wallets are empowering users and unlocking a new era of the internet.
Now let me introduce you to our powerhouse guests. With us today is Anand Desai, the legal luminary behind DSK Legal, who's advised everyone from Fortune 500 companies to celebrities and was appointed by the Indian government to reshape national legislation. Alongside him is Branson, a pioneer who has developed a mass licensed digital security exchange and successfully raised funding through ICO. He's navigated complex regulatory frameworks and shares his expertise as an adjunct lecturer at leading universities, training the next generation of blockchain professionals. So, Branson, in countries like Nigeria, 84% of the people are using digital wallets. Now, looking at my wallet here, what makes these digital wallets so special that they're spreading this fast?
So digital wallets, as the name suggests, is digital in nature, right? Then first of all, we need to look at the population of Nigeria. So as we know, 93% of the population in Nigeria owns mobile phone. So as such, it's ubiquitous, and it's no wonder that digital wallet, which is functioning like an app in mobile phones, can flourish very well in countries like Nigeria. And I guess the other reason is also age-related, right? So Nigeria's population is very young, with a large percentage of people, which is close to 70% of them, under the age of 30. So the younger generation grows up with devices and the internet. So as such, digital wallet comes as second nature to them.
Anand, in many countries, over half the population use digital wallets, which is amazing to me. But with all this new technology, how do people know their money is safe since you can't physically see it and you don't get a bank account statement to confirm the balance?
Yeah, the world has changed a lot compared to what we were used to. Paper currency, it's now digital. If you take identifications, they're now digital. We don't need to now carry driving licenses, maybe even passports soon. We need to get used to it. Ultimately, there is an ability to put money into a wallet, use it. It's not like a bank doesn't give you a statement. You do know the balance in it. You keep using it while there is a balance. It's an adaptation, is the way I would look at it. And we are seeing it in so many fields now. We are seeing it in areas which we could not even imagine. When we bought a flight today, we don't need a ticket. When you buy something, you don't need a credit card, you can just transfer money. India itself has gone through a huge program to digitize, which has really helped the population across the country. Moving money is so easy now to even remote areas. So it's a question of adaptation, getting used to it, understanding it, and then living with it comfortably.
Anand, earlier I mentioned how hundreds of millions now use wallets, but how do these wallets make your life easier? I mean, how do they help you own assets?
That transformation is currently happening. It has been talked about as non-fungible tokens. You tokenize an asset, it's like breaking it up into representative pieces. You can then trade in those tokens. Those tokens have value in themselves. It's like a cryptocurrency which will go up and down based upon the value of that token at a point of time. The ease of doing tokenization is that it's a digital record. You're not carrying title deeds of, say, land. You're not carrying certifications which may at some stage get destroyed, mutilated, wet, as simple as that. In this form, the permanency through blockchain technology is far more clear, it's far more secure in many ways, it's far easier to use in this form. And I think that is the transformation we have to again adapt to. But when we do, it's difficult to imagine going back to physical records, papers, etc.
Branson, I heard the Web3 wallet has a public key and a private key. So what's the difference between these keys?
Yeah, so these concepts sound really technical and foreign, but let me share a little analogy. So the public key is like the address to my home, while the private key is the physical key or the digital password to the door of my home. So while I can share the public key with anyone, just like if I purchase some goods online with an e-commerce site, I can share it with them, or I can share with the delivery person. But the private key is something that I will not share with anyone, including the e-commerce site, right? Because I do not want anyone to be able to open the door to my house. So therefore, I will keep these keys safe and secure, while the public key can be shared.
Web3 wallets, your key to digital tokens. There are two types of wallets, hot wallet and cold wallet. First up, hot wallets. Think browser extensions, mobile apps, and desktop software. They're online, lightning fast, and perfect for smooth transactions of digital tokens. Cold wallets is like offline hardware, like a digital safe. Keys stored offline provide maximum security, perfect for long-term storage, keeping your tokens safe from online threats. Hot wallet, fast, convenient. Cold wallet, ultra secure. Choose based on how you use your tokens. Pick your wallet and explore the future of the internet. Learn more today.
So, Branson, with multiple chains and wallets, it can be overwhelming for new users like us. Multi-chain wallets are now changing the game. How are multi-chain wallets creating a more connected experience in Web3? And how do they simplify access to different blockchains and apps for the user?
In general, users want convenience and quick access. So these wallets provision multiple chains on top of their wallets. And as we know, most users are not technical in nature, so they don't really care the differences between different blockchains like Ethereum or Solana or any other blockchains. And in fact, they don't even care about, the number of transactions per second or gas fees and so on and so forth. So at the end of the day, if I want to store some assets, I want to do it without the hassle of going to download different wallets and having to remember different types of phrases or the mnemonic phrases and keys. So hence, a wallet that allows me to have access to all these types of assets residing in different blockchains will definitely go a long way in terms of onboarding more and more users.
So it's going to get really easy to manage multiple assets on different chains from a single wallet. It sounds like a wallet of wallets to me. Is that what we're talking about here?
That's exactly right. Yeah. So what we are saying is that we have wallets that allows users to gain access to different types of assets. And it can be Bitcoin, it can be Ethereum, it can be any types of digital assets that the users want to procure. and store in their wallets. And it could even be tokenized real assets in the future. It could be shares, it could be tokenized real estate tokens. And hence, this is a step forward for many users that are able to then leverage some of these assets for lending. It could be for borrowing, and they can gain financial services based on that.
So, Anand, as governments develop regulations for digital assets, the traditional concepts of ownership are being challenged. So how will new regulatory frameworks distinguish between ownership by virtue of legal title versus ownership from possession?
It's going to be a significant change in legislation, rules, and technology is evolving so quickly. It actually needs to be always one step ahead as it is to what the regulations say. But if you look back at the older statutes that we have, by broad description, broad definitions, that can actually encompass change to a very large extent. Yes, you do need technical terms to define the technology, how it works. As Branson described just now, the public key, private key. You need to ensure that people are educated enough to safeguard the tokenization and tokens that they have. The government is, in every country, as far as I know, looking at it. The EU is looking at it. The UK is looking at it. Singapore is looking at it. India is looking at it. The understanding as to how it works is the first issue. The understanding of how one can regulate it logically without killing it is a bigger issue.
So now we're going to move on to some questions from our audience. So Branson, I'll start with you. When managing cryptocurrencies on an exchange, users often notice discrepancies between prices displayed in their wallet and those on the regular market. So why are prices different in the wallet versus the regular exchange market?
So most wallets, when we look at the interface, they have multiple solution providers connecting to that particular app. So this could be payment solution providers, right? And these payment solution providers will actually connect the users to the liquidity pools out there. Now, of course, these third-party service providers could be exchanges themselves or purely payment companies, right? So depending on how large the provider is, there could be some slippage in terms of the prices quoted. And therefore, these providers will also need to charge a fee for their services. And hence, there's a markup in terms of the prices. And when the users see the price, obviously it's different, right? And at the same time, if their services are not connected to a sufficiently large exchange, then again, we will see discrepancy in terms of the prices, not being able to reflect the actual market price.
Anand, so over to you. Wallets are the key to ownership proof in the Web3 world. What are the possible options for someone who ends up losing access to their wallets? Are the assets gone? Is there any possibility for recovery?
In theory, it can be done. But as Branson said, if the private key is not disclosed to anyone, not mentioned anywhere, in any writing, with any family member, any trusted person, it's going to be not so easy to get it back. But if I may give a parallel, I know there's a time and a place in this world that's talked about of having numbered accounts for banks, and family members sometimes don't even know the person who's made the money has kept it in a place he does not want it to be found. and they pass away, and that money is very difficult to access. So it's different, but it's still something to keep a proper record about and ensure that succession happens properly and you don't get locked out, so to speak, of your own money through the tokenization process.
So, Branson, as governments increasingly promote digital wallets to enhance financial inclusion and efficiency, how does the government support safe and secure wallet adoption while ensuring user protection?
Yeah, so I think, first of all, most governments to come up with a proper regulation as to vis-a-vis the exchanges and service providers, right? Because at the end of the day, most users will gain access to these assets through some of these service providers. And of course, we know from some of these recent hacks for the exchanges and so on and so forth, that sometimes they are not sufficiently secure, or they have not a very robust kind of security procedure in-house. And this is where the governments themselves can actually come up with a proper framework that ensures that these exchanges or service providers or virtual asset service providers actually have a robust security framework.
Well, I'd like to thank our audience for those awesome questions, and moving on to some more questions now. So Anand, imagine a scenario where a user intends to transfer their Web3 assets to a loved one, but passes away before sharing their private keys or seed phrase. What happens to those assets?
It's a good question. I don't know how it's going to play out, to be honest. But over time, for example, for shares in dematerialized form, for insurance policies, for bank accounts, came about a concept of a nomination being made by the holder or the owner, so that the entity that was controlling it, whether the exchange, the issuer, or the overall society, bank, insurance company, knew immediately the identity of the successor of the person who passed away. We'll need to come out with something on those lines in a manner that stays secure, safe, but yet not the system where someone just loses the asset. So we keep evolving in multiple areas as time goes on. And I suspect each government will have to figure out a way. And there'll be some commonality because it requires some common sense to find a solution that preserves the security, privacy, and yet does not make the family or the loved one, as you said, just lose the asset.
So, Branson, many sources predict that substantial growth in Web3 adoption in the coming years. What are the biggest usability hurdles preventing mainstream adoption of wallets right now? And what specific strategies can simplify the onboarding process for new users?
And so I think there are two main hurdles right now for Web3 users. The first is the creation of seed phrases. So when you create a wallet, you basically have to remember seed phrases. And this is something which is extremely difficult for users to store in a secure location. And sometimes it could be written on pieces of paper, which is the right way to do it. But unfortunately, the question is, where do you keep it, right? So I think one way that perhaps some companies are looking at is to use facial recognition, right? So maybe that's one way to do it. And that doesn't require users to remember, long string of passwords or even wallet addresses.
Anand, wallets are evolving from simple storage solutions to becoming integrated platforms for digital identity, on-chain payments, and interaction with various Web3 applications. How are you envisioning the future role of wallets, and what are the key features for making your wallet an indispensable tool for navigating the decentralized web?
I think the challenge comes in terms of how do you ensure that that movement is done in a manner that is as secure as you can make it. But yes, it's all got so interlinked now. And, we often talk about it when you have facial recognition, which exists as a software today and as a technology today, including for giving quick access out of airports. I understand Singapore airport has undertaken this already. That's leaving a complete trail of where you are all the time. So privacy has to be balanced. Safety has to be balanced in terms of security of your assets.
Branson, I want to also pose that same question to you as far as the evolution from these simple storage solutions to really becoming an integrated platform.
Yeah, so I think the wallets nowadays, I think it is just a separate app, right? And going forward, I think, and the app at the end of the day, for most users are just, buying and selling of assets. But going forward, I think with the digital wallet being residing, in our phones, I think one of the key areas is what else can we put on top of this digital wallet, right?
Well, I'd like to thank our incredible guest today for spending time with us. Amazing stuff. I'm Dan Geltrude. We'll see you next week for another exciting episode.